All right, sweet. Hey, Steven's at the gym. Get them gains in, get them gains in. All right, so you guys can see my Finviz screen right here. So what Finviz is it's basically a stock screener to where you can put in parameters, such as the ones you see over here. So like, let's say I click on this breakout, right? So what I'm doing is I'm putting up descriptive parameters. So I'm looking for things like average volume over 1 million. Now, the reason I look for average volume over 1 million is you don't want to trade a stock that's low volume. If it's low volume, it's not going to move even if the index is pushing. So it just filters out all the low volume, like boring stocks that you don't want to waste your time trading. The next thing you want is optionable, because at the end of the day, everyone here is probably trading options. So you want to make sure that the tickers you're screening for, you can actually buy contracts on. And then price over 30 just happens to be what I set it to. This is just so that way you filter out like any sort of like penny stock or lower cap security that you don't want to necessarily trade. Then you get to this technical section. So technicals are nice because you can pick you can quite literally screen for anything. Like if you want to screen for a breakout, you want to screen for a pattern, every pattern you can think of, whether it be triangles, wedges, channels, double tops, double bottoms, you can find those on here. You can even look for stocks that dump after hours, stocks that pump after hours, different things like that. So with Finviz, the best way to use this would be to literally just like throw random things into Finviz, find out which screeners you like, because as you can see, it automatically like charts these for me. So when I click charts, like, I'm just going to click on page 6. We'll go to this ticker. We have a descending pennant right here. It breaks out below, puts, breaks out above, calls. So this, like, I didn't edit this chart. I didn't add these lines. I didn't do anything. Like this created it for me. You can even change the time frame. It'll tell you like different setups on different time frames. The automated screener that it's, or the automated analysis it's using doesn't find anything on the 15-minute right now, but you click on the daily, you see this structure right here. So screener, Finviz, 10 out of 10, it's free. You don't need the paid account. The paid account, all it does is let you use like more presets, but most times you don't need that. Another convenient thing about Finviz is heat maps. So this is a heat map of today's market, a lot of red. This doesn't include after hours. That's why Amazon is down like on the heat map. This is great just so that way you can see general market direction. So these two tricks right here are very, very helpful when it comes to trading. So what I'm going to do is I'm going to give you guys all of the screeners I use. I have them right here. If you guys want to take a picture, cover this up. Actually, I'll just put it in the Zoom chat. So I just put that in the Zoom chat for you guys. These are my favorite screeners to use. My top two would definitely be the major breakout and the monster scan. The wedge down is decent. It's not the best, but it's, it's a very simple pattern. Like if you were to play this right here, you just play the breakout off this purple line, So I dropped those in the Zoom chat. I can also put them in the Discord for everyone else in case the people, like if you're watching this through the recording rather than live, I will put this in the Discord and resources and tools for you guys to use. But those are 4 amazing screeners. And real quick, just to show you how to do it, when you click my presets, click edit screens and save screen. And then when you come to save screen, you can just say Zoom test, go to the Zoom box, like literally just do this real quick. You just take major breakout, copy and paste that in, including the V equals. Make sure you have that V equals in there, save changes, go to screener, Zoom test, charts, boom, right there. Oh, look, BABA. Oh, damn, maybe this is actually something we can trade. So just like that, it does it for you. Super simple. Another great way to find positions to trade is Twitter. So we covered this in the last lesson as well. All you have to do is just look up a watch list. So like today's the 3rd, tomorrow we're looking for watch list for tomorrow. So I'll type in 2/4 watch list. When you're looking at this, what you're specifically looking for is like, see how this person mentions Apple. The next thing you want to do is just see if someone else mentions Apple again. So right, we have Apple, DraftKings, Uber, Visa, Pfizer. You just look for it again. Look, we have 2 BABAs right below each other. So with this, look, another Apple. So if let's say you see Apple mentioned 15 times and it's like consistently mentioned across different accounts, like watch lists, it's just a good indicator that you should probably be watching that ticker that day. Another DraftKings right there. I know I saw an NVIDIA earlier as well. So this is really good for just, if you want to just quickly, find a watch list, find some tickers to trade. Great way to do it. I use this, just it just saves the work for you, but yeah, so that's how to use FinViz, how to use Twitter to find stock positions. These are probably the two best ways to find your trades. Another good thing would be earning reports, which you can literally just look up on Twitter. You can just go earning report, and then for 2021 earning report quarter 4. And then latest, not seeing any right now just because it's later in the evening, but you'll typically just see like someone will post like what the hot earnings to watch. If not, you can just Google it. Just, knowing earnings is another great way to find positions. So screener, Twitter, earnings, that'll typically be what you need. Now, the next thing I want to quickly jump into, just to review from that first lesson, is how to mark support and resistance lines. Just going to turn off everything. Delete this line. Delete this line. Delete this line. Delete this line. So whenever you're looking at any ticker, whether it be the index, whether it be Alibaba, whatever it may be, the very first thing you want to do is go to like a week chart. And here you just want to look for levels where if you're looking for support or resistance, all you're looking for is just a consistent spot where it like rejects. So if you look right here, it's not getting above this level right here. So it formed the resistance on this green wick. And just like that, your resistance, it breaks above, calls, rejects, puts. If you're looking for a support, we can see right here, it wicked a few times right over here. So you just want to identify where, like what level is it staying below and what level is it staying above. So just for this one, you can see that it formed, because keep in mind, this is SPY is making all-time highs at this level. So all you want to do is like when you see that it formed this high right here, right? We have this fake out candle with this red right here. Evidently, it's a resistance. Later on, it acts as a support. So when you identify a resistance on a chart, if the stock eventually goes above that resistance level, the next time it encounters it, it'll be a support. So you can see that here, it was originally a resistance, had struggle staying above, had this low wick, but just barely closed above this level right here. Flash forward a few more weeks, jump to September, acted as a support for an entire month. So very, very simple to do with support and resistance lines. Once you finish the week chart, you're going to go down to your day chart, and you're going to do the same thing over again. You see another level that it's like having trouble staying above, like we can go into a trend line. You can go right here. You see it makes this high. This has to be some sort of like, this is just an important price line to watch. So it's really just plugging and chugging like different levels. Like you notice it rejects somewhere here. It breaks above, has a nice rally, forms a new resistance, and then it just flirts between these two levels back and forth, back and forth, back and forth, back and forth. Something I want to emphasize is, remember, stock charts aren't perfect. When you're looking at like for example, if I was to Google support and resistance, go to images, it doesn't look like this. It will never play out like this. It will never be this perfect. As you can see, it's going to wick, it's going to break above, it's going to reject, it's going to, consolidate right below. So with your support and resistance levels, expect it to, wick below, wick above, it's not going to be just like a perfect bounce and then reject. Like it just won't work out like that. Common misconception is because you'll see these like beautiful pictures, like such as this one, where it's like, yeah, like, you just keep playing the bounces back and forth. If it was that simple, everyone would do it. So just to keep an important tip to look for is when you see something like this, for example, a lot of people will just see this level and then they'll automatically just go to the high wick and mark that as a resistance. That's not your resistance. Your real resistance is on this first wick, because this is the level it rejects. You can see here, I'll turn this to, let's make it yellow. If you look at this yellow line versus this red line, if you were to trade this as your resistance, you would have gotten fake. Like you would have never found the entry here for puts. You would have never found the entry here for puts. You would have never found the break right here because you would be looking for this wick right here. So always remember to look for the first resistance it forms. And then what you're looking for after that is just price action, whether it's rejecting, whether it's breaking, whether it's wicking, it's going to be one of the three. And that's how you confirm that it's like an accurate resistance to follow. Once you finish on the day chart, you go down to the 4 hour. I'm going to quickly teach trends because trends are very, very, very simple. Very simple. When you're looking for a support and resistance level, what I look for specifically is I just want to see it touch the line twice to identify. So if I go over here on the chart, right, we form this resistance wicking here. I confirm that this is our resistance with this wick right here. That's all you need for support and resistance. Now with trend lines, you want it to touch the line 3 times to confirm, right? Because let's say I can go more short term. Let's say we see this high right here. This white line I just drew, I'll make it green, just so that way we're not getting confused. Let me get this red line out of here and make this one green again. So when you're looking at this green level, we have no idea what the next candles are going to do. It can fly straight through this resistance at 458.00. It can just tear straight through it, or it can reject it. We don't know yet. So that's why I say make sure you wait until you see two touches to confirm it as a support or as a resistance level. Now with trend lines, what you're looking for is 3 touches. And the reason I say that is because, for example, I can, okay, let's say I was to draw this trend line right here. It touches 2. There's no telling it's going to continue to reject. Well, this is a bad example because this is actually a trend line. It's touching more than 2. Which one do I want to use? Damn, these are all just like perfect examples of trend lines, not like bad ones, but nonetheless. Okay, so like let's take a look at this green line right here, just because it is a good example of what a trend line is. You form the trend line. When you see this second touch right here, now is when you start to think, okay, this might actually be a trend line. When it reacted like this, so you can see on this candle right here on the 4-hour, it attempted to break out of the trend right there, rejected. The reason we know it rejected is because it wicked above the trend line, but it closed below. Like I'll make this as big as possible so everyone can see. It closed right below our trend line. So this next red candle that opened up, it attempted to push higher, but just because of all the sell power here, it rejected strong. Like this was a strong rejection right here. This is how you know that this is a trend line that'll produce a break, because we had the first 2 touches to identify it, and then the 3rd touch to confirm it. So then when you come down here, you get this beautiful breakout. Very, very simple. We identified this support earlier on the week chart, this red line right here. We got this on the week chart earlier. And now we have this trend line breakout right here with this green line. All it took was 2 lines. And this, if you really carried these calls the whole way, like that's a 433 to 457 move on SPY. You know, that's a 2,000-3,000% move if you were to actually like hold it through that entire duration, right? So trend lines, support and resistance levels, it should never be something that you guys overcomplicate. Just like take the simple route with it. With your support and resistance lines, you want 2 touches to confirm. With your trend lines, you want 2 touches to identify and a 3rd touch to confirm. Now, I need to find an example just to show you guys why you need 3 touches, so it makes sense. There's got to be one here somewhere. Actually, we can use this right here. So right here, if you were to draw this trend line, for example, this green line, I'll make it white just so it's easier to see, get a little bit thicker. So this white line right here, we'll even make it dotted. Why not? So this white dotted line right here, if you were to identify this trend line, you have 1 touch, you have 2 touch. This was in a pre-market move. So this wick is meaningless, and I'll get to that later. But just hold on to the thought as to why this wick is meaningless. This trend line, unless we see the price action, like the next candlestick tomorrow morning, react to this trend line, it's not a real trend line. You know, all I did was connect 2 points. It doesn't mean anything. So it can trade with complete disregard to this completely tomorrow, simply because there's no confirmation. We have 2 touches to identify it. So it's worth noting. But until we get that 3rd touch, we won't know if it's actually like a trend line that we want to follow. So now that we've covered that, that was basically what we did in lesson 1, was we went into a lot of detail with this strategy specifically and how to find support resistance lines and how to find trend lines. But it's very, very simple. The best way to do this is I would literally say is like, look up BABA stock, go to your week chart, assess the level. Once you're done with BABA, go to PLTR. Once you're done with PLTR, go to NEO. Once you're done with NEO, go to Tesla. and just keep testing it, you know, keep just practicing and practicing and practicing. Practice will make perfect with this. So that is how you identify support levels, resistance levels, and trend lines. And that is really the basis of your trading, because let's say we were to go on to FinViz, for example, and then just click major breakout, custom, look at it, or not custom, chart. All these are trend lines. As you can see, formed here, identified there, confirmed there. Same thing up here, formed here, identified there, confirmed here. So all your trading really is, like when you're looking for a trading pattern, all a trading pattern is just like a group of trend lines that, you know, in line, that are in line together. So some important trading patterns to reference, I would say go check out the reel on Motivated Trading IG. If you go over there, you'll see a reel on the 3 best bullish breakout patterns. But just some important ones to that I recommend you guys looking into would be, yeah, I can show them. So we have ascending channel. All it is a channel. You have your ascending triangle. All that is when you have a horizontal resistance with an increasing trend line. Then you have wedge. Wedge is commonly, people call wedge and pennants. They interchange the two names. All a wedge is a triangle. You just have 2 trend lines, a support one and a resistance one. Let me open the chat box. Hey, let's go, Steven. Yeah, Steven put the video in the chat box for you guys. So definitely check that out. 3 bullish breakouts, amazing trades that you can consistently use. And then you have pennants also, which will probably just come up with the same thing that I looked up for wedge. They're very, very similar. You know, just you have a resistance trend line and a support trend line that's going to produce a breakout in either direction. So when you're looking for patterns, all you're doing is you're taking a bunch of support and resistance levels, you're taking your trend lines, throwing them together, and thus it creates a pattern. So that is like our summary from lesson 1. Now for today's lesson, what I specifically want to get into is the S&P index and the Nasdaq. So you have the S&P index, strong and poor 500. You have the Nasdaq 100, which is the top 100 tech stock. The tradable tickers for this would be SPY for the S&P and then QQQ for the Nasdaq. So let's just read in the chat. All right, so like let's say we were to go onto a 3-minute chart for SPY. Wait, let me go up here and just delete all of this so we can start fresh. So it's here to go onto a 3-minute chart. Whenever you're trading, no matter what position it is, at all times, you always want to have a SPY chart open at all times. Any stock platform that you're using to like analyze charts, whether it be Webull, Thinkorswim, TradingView as I use, anything you use will let you put up multiple charts next to each other. Like you can literally just put 2 charts next to each other. Like I can make this an AMD chart, you know, and then right here, you have your pre-market or after hours right here. Always trade the 2 together. And I will quickly show you why. Apple is going to be a better example for this for today, just because Apple followed closer. So if we're to look at this, and then you're to look at this SPY chart, we got to make sure they're on the same time frame. As you can see, these charts are very, very identical. So we'll start with the open session. SPY opens with a quick push at open. As you can see on the Apple chart, you get the same quick push at open. SPY reverses, Apple reverses. SPY rises, Apple rises. SPY dips, Apple dips. SPY rises again, Apple rises again. And it's just going to follow this throughout the entire trading day. Look at this massive sell-off at end of day. All this was all Apple's rejection right here was 100% because of the S&P index. So you can do this with any ticker. You can throw in Microsoft, right? It'll do the same thing. SPY opens with a push, Microsoft gets a push, SPY rejects, Microsoft rejects, pushes again, and then it's just going to follow. It's just going to follow. Gets the same end of day sell-off that Apple had, right? So for the vast majority of stocks, they're always going to follow the index. Now you're going to have these exceptions to where like you could have a bloody red day and then you'll have 1 or 2 tickers that are pushing. You could have a very green day and then you'll have some tickers that aren't. So when that happens, just keep special note on them, because there's definitely a reason as to why, like whether it be an acquisition news, an earning report, even a technical breakout can create certain trades that will trade opposing to the index. Isn't UVXY a good chart to compare SPY to? So UVXY is the pro shares. It's the volatility index, if I'm not mistaken. Yeah, it's the short-term VIX. So it's just going to trade opposite of SPY. So like if SPY goes down, VIX goes up. If SPY goes up, VIX goes down. So like if I just to put in the direct VIX and put in SPY on this side. All right, here, let me put VIX on here and SPY on here since they're naked this way. All right, you'll see the same thing. This is our 3-minute chart on the VIX. Whoa, why is this so weird? So you see when SPY is selling off right here and VIX is rising right here. It's just like with the VIX index, like it's just testing market volatility. So if VIX is rising, SPY is falling. If VIX is falling, SPY is rising. So you can compare these two charts together because they trade opposite of each other. But if you're trying to trade the index, like the S&P index, just like, or if you're trying to trade any ticker, just go with the S&P index, because it's basically like in simpleton terms, it's just going to tell you like what the grand scheme of the market is doing. Like, so if we were to go onto our screener and then go to maps, this is red because SPY is red. If SPY was green, this would be green. If that helps. Did I answer your question to what you were looking for, Krishan?
Yes, I usually trade the SPY, so that's why I look at the VIX, and I know when VIX is rising, I go on puts on SPY.
Exactly. So you can do it either way. Like if SPY is rising, you can put puts on VIX. If VIX is rising, you can put puts on SPY. For support and resistance level, do we look for 2 points for wicks or bodies of candlesticks? So with support and resistance levels, you're gonna see wicks more common than like candlesticks, just because like a wick, like when the stock price is approaching like the resistance or the support, if you're looking at the buy and sell orders, you'll see like how it rejects. Like there might be a 60,000 shares of sell order for SPY, like right above resistance. So it might break the resistance, but then reject at that sell order and then wick below. So with your support and resistance levels, you want to use both. Like, I don't want to advise you to use one over the other. Just use both, because in some scenarios you will find it to where like the candlestick lines up perfectly, but in other scenarios you'll find it to where the wick is better. But yeah, just use both. So like if I was to go back to like the SPY week chart, just to show that example again, if we're to go up here, super simple. We see this level right here. So this is, I'm using this one, I'm using candles, like I'm not using the wick. You can see how it closed right on this candle right here, and then it closed right on it again. It attempted to wick above, failed. On the next candle, it opened higher, tried to wick below, rejected, continued upwards. You can see right here, same concept. On this red candle right here, wicks below, wicks below. So with your support and resistance levels, whichever, it's different scenario, like ticker to ticker, time of the chart to time of the chart. Oh, anytime, man. But yeah, so just use both for that. But back into like how to trade the index. So with SPY, I like day chart. I like day chart EMAs the most, because when you're trading an index, if you're using like something like an exponential moving average or a simple moving average, or any sort of moving average, it's going to serve the strongest on a higher timetable. So if you're looking at the day chart and then you're seeing things like 200 EMA and 50 EMA, I'm sure you guys have all seen like posts by CNBC, like Jim Cramer, all of these news related investors. They're like, oh, the S&P index is breaking the 50 EMA for the first time in 12 months. And it's like, yeah, that's a very important technical pattern, because like when you're having something like, and let's just say we were to explain what like the 50 EMA is. The 50 EMA is just the exponential moving average for the past 50 days. So it's taking all of these candles, like take all of the candles, and if you were to make like an average, like linear projection of the candles over 50 days, and then give more importance to the most recent candles, so like let's say the last 10 days of the 50, that's what your EMA is producing. So on the larger timetables, using something like an EMA, I don't have one set up on this indicator setup, but I can quickly do it just for example setups. Like if I just throw on this triple EMA, that is the worst triple EMA I've ever seen. Okay, there we go. So right here we have the 20, the 50, the 100, and the 200. 20 being closest, 50, 100, 200, if I'm not mistaken. 20 is red, yeah. So red line is the 20 EMA, yellow line is the 50 EMA, teal line is the 100 EMA, blue line is the 200 EMA. So for this blue line, for example, what this is doing is it's taking the candles in the last 200 days, so 200 days from February 3rd, and then it's giving priority to the most recent candles. I don't know the exact calculation for that. Like it could be it might value the last 50 days over the 150 days before that out of the 200, whatever it may be. It's going to give more value to that, which is good because it accounts for current market conditions. Whereas like a moving average is literally just taking the candles and then creating like a linear projection of where it's going. So with this EMA, you can see that it acts as a support. Like right here, this EMA is what acted as a support. There is no support level right next to this. You know, like it's cutting straight through this green candle right here. There's no support, like physical price line support that it bounced off of, but it failed to stay below the 100-day EMA right here. And it bounced back up, broke through. So when you're trading the index, definitely keep watch on EMAs. So like, for example, the next EMA we are looking to see is depending on how well after hours pumped. So we might see us reverse to the upside and break this 20 EMA right here. But if we don't, we have, oh, that's anchored VWAP. So if we don't break this 20 EMA, we are going to fall to the 200 EMA. You can see right here, it acted as a support, couldn't stay below, pop back above. So that's the first thing you want to reference when you're trading an index, whether this be QQQ, like I can literally just put in QQQ, and you'll have the same exact thing. Like Nasdaq is below the 200 EMA right now, you know? So if this doesn't recover tomorrow, well, let me check 4 hours to make sure it didn't recover after hours. Yeah, it didn't even recover after hours. So we're going to look for the Nasdaq to recover the 200 EMA. So this is what it's going to tell you is like, if this stays below, you can expect it to continue bearish, which is going to give you a trade sentiment to go into tomorrow. Now, if it attempts to recover tomorrow, which we'll see in pre-market, you know, we can continue bullish, which tells you to look for a bullish indication into tomorrow. So now the first thing you should do with an index is definitely check like higher timetable support and resistance levels. And then number two is to make sure that you're in reference with some either an EMA, an SMA, or a moving average. I prefer exponential just because it gives importance to the most recent candles, as I said earlier, which, as we said, is just because it's going to take into account current market conditions. Because like, for example, if you were to use like a 200 MA, it would have no factoring for everything that we've seen in terms of like political influence in the past 2 months. Like it wouldn't factor in for that because it's just going to based off of like this algorithm that's calculating all of the candles without giving importance to recent ones. Whereas these recent candles are going to reflect things like the war with Russia, what happened with ISIS today, and things like that. So using the EMA is my personal favorite for higher timetable analysis. They work the best on the day chart. So like, let's say let's just keep going with this analysis idea. So I'm gonna neglect this candle just because I'm gonna use this morning's pre-market. So this red candle wouldn't have been here if we did this analysis last night. So we're focused on here. So we see that this candle almost wicked the 200 EMA, but it closed above the 20. So what this would have told us is a bullish indication going into today. So if today I went on QQQ, same thing as doing it on the S&P, you go to a 3-minute chart, you're gonna have these pre-market levels. So I remember, if y'all remember earlier when I said, do you guys remember that candle where I said it doesn't matter on the 4 hour, that wick that doesn't matter? It's because for some reason indexes will do this in pre-market and after hours where they'll just randomly wick like this was like it's $7 wick. Why I did it, no telling, you know? So that's why I said like ignore that wick in that one specific example. If you have a pre-market wick, it doesn't matter just because it just like pops up and then back down. If any of you guys have seen that in real time. So on the 4 hour chart, like if you were to go to QQQ, like where would this be? This would be this morning at pre-market. Bad example because it fell. So this is like a bad example of it, but just be cautious for that when you see like a high wick that's coming from pre-market, because it could very likely just be something like this, but it actually fell during pre-market. So what's it called? It's just showing as a red candle. But definitely just keep watch for things like this, like just fake out points. But nonetheless, the focus of here is when you're trading the index. So you come into this position with an idea of what it's doing based off of the day chart. We're using that EMA, we're using the support and resistance levels. The next thing you want to do is when you're trading intraday is you want to make sure you know every single pre-market level. This is the best I'm telling you, this is the best way to trade the index. And I'll show you exactly why. So if you were to mark this right here, this first high right here, the only reason we're marking this is because, as you can see, it showed respect to this level right here shortly after. I have it slightly below. So it shows respect to this right after. We have a green candle that breaks above, instantly rejects on this red candle, tries to wick on this next red candle right there, tries to wick on the green candle, shows respect. So what we would call this is a pre-market high resistance. Same thing down here. When you see these multiple points where it's staying above, this is what I would like to call a pre-market pivot. Because off this level, it has pivoted multiple times. It pivoted here, pivoted there, pivoted again, and then here it finally broke below. So then you have your pre-market low right here. With this one, I'm just going to take the candle close just because, as you can see, right over here, you have this wick. The wick, it wicked the resistance, and then the next candle opened or closed right above it. So that's how I know that this is like the support level I want to watch during trading hours. As you can see, it perfectly wicked it right here. And all I did, like during hours, like I'll have this line projected before we even see, like before we even see any of these candles, I already know that this line is here. So we know that this is a support to look for. So if you were trading this on like the 2 minute or the 1 minute, you know, you can, oh wow, that got ugly. So like, let's say you're trading this on the 2 minute, or this is the 1 minute. You could buy calls as soon as you recognize that it recovers this low wick. You buy calls here, you have a steady uptrend to follow. And the objective of this trade specifically for this right here would have just been a pre-market low bounce. Could have done the same thing here, is recognize that I wicked it too early into market to rush a position. So this one's a bad example, but like with this, for example, you know, wicks your pre-market low, recovers, you can take calls there. Same thing right here. We have our pre-market pivot. It shows respect to our pre-market pivot here as a support, fails to stay above, rejects, recovers here, shows respect again on this wick right there. And then you can just take calls from here to here. So the reason this is important is because let's say you were to see SPY approaching this pre-market pivot, and at the same time you wanted to buy a AMD call or a Microsoft call. AMD could be set up to break its own resistance, but since SPY right here is failing to stay above its pre-market pivot, it's going to fall below, and AMD will follow. It's an assurance that like for the vast majority of tickers, like if SPY is dumping, they're going to dump with it. If SPY is pumping, they're going to pump with it. So this is exactly why, like you could have seen an A+ setup on AMD, but if you're not watching the S&P index, you wouldn't know that it's breaking a pre-market pivot and it's about to slide off quick, because this is a big move. Well, this is QQQ, but like from 360, you know, this fell all the way down to 359.21. Like that's a sizable move to consider when you're trading an option, because then it's going to fall. It fell even lower after. It attempted to find support in like the same consolidation zone from pre-market. So what you can do here is you can do, where is it? So what I can do here is I can just create a price range. As you can see right here, it's trying to stay above the same resistance that it stayed above in this consolidation, and it held up right here. So this is what I mean by use pre-market. I appreciate your teachings. Where can I find the last Zoom video? Oh, thank you. For the last Zoom video, I just need to edit it and upload it to YouTube, but I will send out those links in YouTube. I hope to have it done by the end of the week this week, and no more excuses on that, because I have not edited that yet and it's just been too long. I just need to get around to doing it. So hopefully by the end of this week, you'll have the last lesson and then this lesson, which also covered the very first one. So lesson 1, 2, and 3 will essentially be uploaded by the end of the week. But yeah. So back to the chart with SPY in the index, with SPY and QQQ, like I can't reiterate this enough. Your pre-market levels, your day chart support and resistances, and your EMAs on the day chart. It's really all you need to trade them. Like you just keep following it, let the chart tell you what to do, and you will consistently continue to find plays and plays and plays. As you can see right here, when we fall below this pre-market low, it attempts to recover above multiple times, continues to reject. On any of these rejections, you can buy puts. If you bought puts on this last rejection and rode them down, oh, you would have been smooth sailing. You would have been smooth sailing. That would have been a beautiful trade to take right here on this last rejection. Now, the next thing I want to get into these is understanding S&P and Nasdaq market psychology. So when you're trading the index, there are days where you'll see, like, I'm sure we can find one if I go to a 15-minute chart, where SPY will sell off the entire morning and then make a very hard pivot. Like here's a good example. So Nasdaq is selling off very hard all morning long up until 11 a.m. Hits a midday reversal, closes closer, not break even, but closer to green. Whenever you see the S&P index or the Nasdaq selling off like from 9:30 until like 2 p.m., there's a very high probability that it's going to recover and reverse for the end of day push. So what that is basically closing the gap on SPY. It's almost like you should go into the market thinking like we are in a bullish market. The people who, the market makers, quote unquote, they want this idea of a bullish market to continue, right? So how do you do that? You sell off all morning, you pump at the end of the day. It makes it look like on a D chart that this market did fine, but in reality, all shit went loose during the trading session. So that's a very important thing to reference, especially with S&P index, is that if it's selling off in the morning, it's very likely that it's going to reverse by the end of the day. S&P rarely trades in one direction. If it's to trade in one direction, it is more likely that it's going to push all day than it is to sell off all day. Because you can see that right here. It literally rose the entire day. I know y'all remember this day. This was a crazy day for SPY calls. Literally everything was pumping all day long right here. But then you see here, sell off in the morning, recover. Sell off in the morning, recover. Sell off in the morning. This one recovered after hours, but that was thanks to Amazon earnings. So that's something to also keep track of. Same concept here, sell off, reverse, sell off, reverse. So with the index, expect it to be choppy, expect it to be volatile. You know, play these reversals. You don't, like, if you notice SPY is selling off in the morning and you miss an entry for puts, just hold cash. Don't force a position. When you see that S&P index reverse, that's when you can load up. So that's a very good tip to just keep in mind, is that if it's selling off all morning, you can expect a reversal. Another thing you can use is if you go to CNBC and you look up futures. So what this will tell you is like the S&P futures for the next day. Oh, I don't care to support. That's not my job. Y'all get enough money. So you can see that futures are positive right now. They typically open at 8 p.m., like right after market close for after hours. So let's say you go into the day and you see at midnight, like the night before, like, or right now or whatever time you see green futures, check them again in the morning. And then let that guide like your mentality going into the trading day. If you see very red futures and you see a bloody pre-market, this one, it doesn't make sense, but for some reason, whenever you see bloody futures and a bloody pre-market, it goes green during the day. But if you see very green futures and a very green pre-market, you can expect that to continue into trading hours, right? So using your futures is basically how you can get more insight in how to trade an index. You're just looking for positive change, you know, and you're looking for substantial change. Like you're not looking like a 47-point move on the S&P at 45.40. Like it's not going to do too much just because that's a small, but like, let's say you came on here and it said the change that they expect would be plus 200, plus 300, you know, that's a big day for the S&P. So that's when you want to say like, oh, futures are filthy green, pre-market's filthy green. You can expect it to continue. But with the red, we have that flip because it all comes down to the market theory that it's a bullish market. Market makers want it to continue. So that's when you see price action things like midday reversals or end of day pushes that make things look better on the close than they actually were. So with that and with everything else I've mentioned, this is how you can set yourself up to be a successful day trader when it comes to trading the index. Another thing I like with the index, and this one is a very simple strategy to do, is that SPY will make trend lines all day long. All day long, it'll make trend lines and it'll break out of these. Even if it's for a small break, it'll break out of them. Like we can take one right here. Where is this going to meet up? Right there. So identify this trend line. It forms this high right on our, what is this? It's pre-market pivot. Oh, that was just a level from earlier. So it forms this descending trend line. It rejects right here, rejects more times right here, finds support right around this level. So let's say you were trading this setup. You identify the support with this low wick, you confirm it with this candle closing above, and you have this trend line. Now, just because it breaks out of the trend line doesn't mean that it's going to fly all the way back up to the resistance that it rejected earlier. As you can see, it didn't. You know, it still stayed below this resistance right here. Right? But if you are to take this break, this is a sizable break out of the trend line, you know? This is from 449.58 all the way up to 450.46. This could be a 10% scalp, 5% scalp on your option, depending on the strike you pick, the expiration you pick. So simple breakouts like this, it'll do all day long. You can find these on, you know, multiple time frames. You can probably find one right here. Let's see. A little bit weaker of a trend line, but once again, the same theory applies. You form this trend line. We identified it here. It failed to close above here. This is how we confirm that this trend line's holding. Right here, it breaks above, but it's still closed, or it breaks above, but when it breaks above here, your next goal would be to see a following candle close outside of it. So what you want to see when you break out of these trend lines is you want to see obviously the first candle break, but if the next one doesn't close green above the trend line again, it can easily reverse back below, because as you can see, it did it right here. You know, it reversed and then it closed below our trend line again. So it's still in this downtrend. It's still trading this downtrend on this final green candle right here. Attempted to wick below, recovered, and that's how you know we've officially broken out. This is another sizable move, 450.55. If you were to exit this at the top at 452.81, this might be a 20 or 30% return on a SPY call. Very, very easy scalp. All you have to do is just identify this trend line. So what I would do is if I was to see this trading, is when you first get this trend line with this green candle, you have no idea where to put the trend line. But when you see this red line, you can throw this line on there. You know, if it doesn't engage with it again as if it was a trend line, just forget about it, move on to the next one. But as you see this time around, it shows respect twice, 3 times, 4 times. And then you're gonna, what's it called? You get this nice breakout. So this is how I would recommend you guys to trade the index. So like just to, like I can put this in the Zoom chat just so that way we have like a step-by-step list of what to do. So the first thing we want, I'll put this up here so everyone can see. First thing you want is support, resistance, D chart. Right. The second thing you want, oh, I don't know why I sent that as a direct message. That way everyone can see it. You want support, resistance, D chart. And then 2, you're going to want to make sure you have your EMA, D chart, bullish or bearish. Depends on above or below. And after that, you want your pre-market high, your pre-market low, your pre-market pivot. And then fourth and finally, you want your intraday trend lines. Now you can throw in futures in between steps 1 and 2. Do you necessarily need to? It's tricky because futures aren't always the most accurate. Like it's not a 100% guarantee. Like futures can be disgustingly red and then the next day pumps. They can be amazingly green and then the next day dumps. So you don't really know. So it's good to use. It's definitely good to monitor. But if you were to not, what EMA lines are you doing again? Sorry, I might have missed it. So with the day chart on SPY, you want to use 2100, 200 EMA index charts. So you can use that for the S&P, you can use that for the Russell, or you can use that for the Nasdaq. I personally don't trade Dow Jones contracts. If any of you guys trade like the Dow, I would the same concept would apply. You know, you would just follow it the same way. But that is exactly how I would trade EMA or MA and Y. So the reason I like, oh, what's up, Patrick? The reason I like the EMA more than the MA is because I addressed this earlier, but for all the people who joined in recently, the EMA is going to take account for the most recent candles. It's going to give rise to the most recent candles in terms of importance. So if you were to use like a 100-day EMA or a 100-day MA, all you're doing is you're taking the open and close of the candle, calculating a linear regression line between it, and then that's your progression. You know, that's simply put, that's what it is. But with an EMA, it's going to give more importance to the most recent candles out of that 200-day period. So I don't know exactly what it is, but like, let's say for EMA 200, it could be that they're going to give more importance to the previous 50 days than they will from the prior 150. The reason that's beneficial is because it accounts for market conditions. So the past 2 weeks, we've been dealing with everything in Russia. Today, we had to deal with the thing involving ISIS. So if you were to use an MA, it's not really considering that. It's just considering the general flow of the day chart. But if you were to use an EMA and you recognize like in the past 2 weeks, it's been very red because of XX and X reason, that's reflective in the EMA. So it's almost like like MA for dummies, EMA easier. Like, I don't know, like how another way of putting it, but like EMA is just doing more for you. Oh, I didn't even know that y'all could draw on this. How are you doing that? I didn't even know people could. That's weird. But nonetheless, yeah, how did you draw on the screen? All right, whatever. No big deal. Nah, you're all good. It's no big deal, but I just didn't even know that was like possible on Zoom. We got Will hopping in on the screen. But yeah, so like EMA, I just prefer over MA. So really with the S&P, just follow the same strategies we went over earlier. Start with that day chart, support and resistance. If you want to check the futures, you can. Recognize if your EMA is telling you to be bullish or bearish. Then you have your pre-market levels, and then very simple trend line breakouts. Then in terms of market psychology, just to recap this all for you guys, if the S&P is selling off all morning, it's very likely you will see a reversal. We call it closing the gap, which basically means like making the market look better than it actually is, kind of. So that's a good one to look for. If you have red futures and bloody pre-market, it's very likely that it opens green. Why it does that, I don't know, but that's another thing to look for. And yeah, like really with the S&P, it's just a matter of just letting the chart tell you what to do, if that makes sense. Does anyone have any questions? If you do, feel free to unmute or to talk in the chat. Or if you have something you want me to analyze, we can go over that as well. Actually, I just got a good idea. We can do the same thing for crypto. So let's say we were to go to Bitcoin day chart. So Bitcoin is going to react to an EMA similar to the way like the S&P would or something of that nature. And it's going to react to support and resistance levels similar to the way that like an index would. But with cryptocurrencies, support and resistance levels are not as strong. So you have them, they're important to reference, but like as many of us have seen, like Bitcoin doesn't give a damn. Like if Bitcoin wants to dump, like it doesn't care how strong the support below is, like it'll fall. Same thing with like if it wants to pump, like it doesn't care what resistance is above it. Like it has a mind of its own. But same thing with crypto, you can see like just off of these, like this analysis I have right here, we formed this support. You can just see how it respects the price action. It's just a little bit uglier than like what you would see with the S&P. You'll see more wicking and more things of that nature. But with Bitcoin, you can do the same thing. It does follow trend lines. So like, for example, we're definitely going to get this breakout eventually. I don't know why I don't have this like auto marked because I've analyzed this chart like a million times. But Bitcoin is set up for a big break because it's not only breaking a resistance right here at the 38K level, it's also breaking out of like the downtrend it formed when it created this 69K all-time high. So with your cryptocurrencies, do the same thing, analyze your support and resistance levels, analyze your trend lines, and it'll do you well. It really will do you well. For futures, CNBC, for watch lists, Twitter, for screeners, Finviz. Can you go over how to identify bullish/bearish trends using the EMA lines again? Okay, yeah. So you have EMA crossovers. Like let's say we were to go to SPY. I gotta pull it up just because whenever I trade EMA crossovers, I just keep it up. And it'll tell you which one's which. You can look it up, but basically there's like set of crossovers. So like, for example, like if the 9-day EMA crosses below the 21-day EMA, if the 9-day crosses below the 21, while it's below the 50-day EMA, it's a bearish result. There's like setups for that with all of them, with like the 20, the 50, the 100 and 200. So one way you can use EMAs is to use the crossover. My best advice for that would be to literally just pull up the chart, because like the 9 crossing above the 21 when it's below the 50 EMA is different than the 9 crossing above the 21 when it's above the 50 EMA. So its relation to the other EMA matters just as much as the crossover. So it's better to just use the chart, because there's like 40 different combinations you can find. But what I was going over earlier with the EMAs and how to use them on the day chart is that when you're using an EMA on SPY or Nasdaq on the day chart, it acts as like a major support, you know? So you can see right here that the S&P isn't touching like any price line support. Like it sort of creates this one on this red wick, but the bigger story here is just that it's failing to stay below the 100-day EMA. So it acts as a support, right? So when you see this crossover right here, you have the 20-day EMA crossing below the 50 while it's above the 100, created a bullish, or it created a bearish break. And then you see right here, the 20 crosses above the 50 while above the 100, it creates a bullish break. So that's what I meant by the crossovers. But you can literally like, there's like 40 combinations. But that's like a common one. It's just like whether the 20 and the 9 and 21 crossing under above the 50, and then the other one would be the 20 and 50 with the 100. But what I was referencing earlier is just that on the larger timetable, this acts as a support, because you can see the same thing right here. You know, it fails to stay below the 200 EMA, which is this dark blue line. So it acts as a support here. So what I would say is like right now we see that it rejected the 20. So we're looking for it to bounce off the 200. So it can just give you a bearish or bullish indication. So it rejects the 20. You would be looking for a bearish move until it approaches the 20 EMA, unless it recovers, or until it approaches the 200 EMA, unless it recovers this 20 EMA. But this doesn't include after hours, where we saw Amazon just like pump the entire exchange. What about the trying to day trade SPY? Does it still work? Does what still work? Like, does the EMA crossovers? Yeah. EMA crossovers work for day trading completely, but they just work the best on day charts. All I was saying with the EMA crossovers is there's a lot of them. The easiest way to follow them is just to have the chart that shows you, like, if the 9 crosses under the 21 above the 50, is that bullish or bearish? It's just the easy way to do it. Is Heikin-Ashi candle kind of used in the same way as EMA because it's estimated per candle? Yeah, so Heikin-Ashi candle is also similar to, I'm pretty sure I have one turned on the setup. So with the Heikin, it's very similar, just because it's taking into account like it's giving importance to recent candle price action. I have my Heikin, like my smooth Heikin-Ashi candles pulled up here, and with these, like I would just play the crossover. You know, if it crosses above and goes from red to green, it's a bullish break, like you can see right here. It's going red, rejection, 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 crosses above to green, floats above, gets closer. That's when you start to look for puts, gets above. So Heikin-Ashi is another great one to use. I'm glad you brought that up, Patrick. Thank you for mentioning that. Oh man, I said anytime, man, anytime. If you ever have any questions, feel free to DM me on Discord. And then also when I upload these new videos, definitely watch them so you can catch up on the previous lessons. But yeah, so like Heikin-Ashi, another great thing you can use on the day chart. It also works well on the like intraday. Like if you click on the 3-minute, you can just see it right here. Whenever it breaks above this red zone, you get a pump. Whenever it breaks below the green zone, you get a dump. And then it also like helps you identify consolidation. But yeah, so that's pretty much how you should trade trade the S&P or the Nasdaq Index. You know, the first most important thing about them is like you cannot trade any other ticker without following it. Otherwise, like it just won't work out in your favor, because you can have, for example, if you're looking at Facebook and you see, let me turn this off just so it gets cleaner. If you have Facebook and you recognize it rejects this resistance, Facebook could be approaching resistance as well. You bought calls for Facebook. If you don't see that SPY rejected its resistance, like you're screwed, you know, it's just going to fall. How are you enabling both candles? Okay, so this is just like I have both, Patrick, because that's an overlay. So like this is like this is like the smoothed HA candle overlay on top of just like my regular candle. So what I could do is I can come here and turn on Heikin-Ashi if I wanted and use the two of them together. But like really all Heikin-Ashi does is just like take out the wick. So I prefer to know the wicks just because I need that for my pattern and support and resistance analysis. So I'll still use the candlestick, but I like to have the Heikin-Ashi overlay on top of that. Because like if you see, like if I was to turn off the smooth one, you're still getting some wicks, but you're missing a lot of them, right? I want to know, like for my own personal trading specifically, like just for me, I like to just know every single wick that happens. Like I want to see them all. Yeah, the smooth overlay is fire. Hey, anytime, Carlos, anytime. I got you, my boy. Yeah, the smooth overlay is fire. Does anyone else have any other questions? Anything they want to ask? If there's I'll take like up to 3 or 4 ticker responses if someone wants me to analyze a chart for you guys.
Can you look at Snap?
Snap. Yeah,
Yeah,
dude, Snap killed earnings today. Killed that shit, dude. When like look at this. It doesn't even look real, dude. It doesn't even look real. Like it was trading at $24 positive earnings and pumps up to 40. Like, man, Snap was, and then Amazon too. Like, let me show y'all Amazon real quick. Amazon moved from 27.78 at close and high at 3,300.
Yeah, it was a $500 move. I looked at it.
Dude, it's crazy. But yeah, with Snap, yeah, we can analyze this right now. Let's start on the week chart as always. So let's see. Yeah, I'd be like talking to myself when I analyze charts. First thing I want to identify is this support right here. It starts out as a resistance, breaks above, consolidates over. That's how we know it's a support, important one to reference. I don't know if we really need to consider the IPO candle. Definitely the close above matters just because you can see how when it IPO'd, it rejected this price line over here. You can see right there, it wicked above, closed below, and then on this one, it opened above and then tried to wick below, but continued upwards. So these are 2 important support levels to consider on Snap. For the week chart, let's see if we got anything else up here. I like this double top right there, or not double top, but double rejection. It's right here. We have a resistance we want to follow. Then we have another one right there. So all I did was literally just match wick to wick. Go down to the day. We have this gap. So what we'll do for that is we'll open this like this, right? We might have a trend line off this. Oh, damn, that's a fat gap as well. Holy shit. Yeah, so we have these 2 gaps. Let's go with this trend line. Someone pick a color. You know, fuck it, I'll just do white. After day chart, go down to 4 hour. So let's see. When we get to the 4 hour. Yeah, I just got a phone call. I'll answer it later. So what we're looking for on the 4 hour right here is I just want to see pivot points just to keep it, just so I know what to look for. So which one of these do we like more? I think this is an important one to follow. So the reason I chose this one versus all the others wait, what the hell? I just don't want to see the pre-market, but it's changing the candles, so I need that. All right, whatever. So yeah, so with Snap, definitely we have this support right here that it, you know, pivoted off of, you know, just closed above. And then right here, wick tried to wick above and the trend at the same time, rejected. So what I would say for snap is we need to see if it's going to continue to break above 4102. If it does not continue to break above 4102, we can see a bounce off of this trend line in like the $33 range, like somewhere over these next like few days, like tomorrow and Monday. So 33 roughly, like it's diagonal. So it really just depends on what time of day it meets it. But a retest of that. And then also, I think we have another one right here. Yeah, we do. Right there. Yeah. So another important level right there. We can make this one like, that's another thing that sucks is when you're doing all this, you got to be careful with what colors you choose. Otherwise, it just looks like a bunch of craziness. So this right here is a gap from the day chart that we identified. So we've broken out of this gap, so it doesn't really matter anymore. So I can go ahead and delete that. But yeah, this is what you're looking for on Snap, is that you want to see either a bounce off 34.73, which is a support line, or you want to see it retest this downtrend trend line and go from there. So with Snap, yeah, just watch it tomorrow. Definitely keep in mind that Google did well on earnings, dumped the next day. AMD did well on earnings, dumped the next day. Facebook ate shit, and it continued to eat shit until the next day. So definitely just keep that in mind. If you have a play, like if you're swinging a snap call, it's tricky because like, you know, tomorrow for all we know, market can just open and pump. But like the most risk conscious thing to do would be if you have a snap call, just sell it at market open. And then if snap continues to pump, just use a pre-market level to decide where your entry is and just buy another contract. But I just know this happened to a lot of people with AMD earlier in the week. We held through the early sell-off and then we ended up getting a worse exit just because it did not return to its high from open. Most of us still got over 300% return on the position because we entered the contract at $29. When market opened, it was at 150, and then it fell to like 122, 121, if I'm not mistaken, at like 9:37 a.m. And then it pumped until like 9:44, 9:45 around then for like a 1.23 exit, which is where a lot of us got it. But for the people that did just catch the open sell at 1.5, like that was substantial. That was like an amazing exit. So with Snap, my advice for you would be to, when market opens, just take your profit, you know, like whatever contract you're holding is going to be up ridiculously. Like Snap is up 50% after hours. Like that's uncommon. Open the day at 24, like ends the day at 39.02. So over 50%. What is that? 24, 39, 15, 24, 16, 60, 60%. Yeah. 60%.
I'm not holding any contracts. I was thinking about playing it pre-market. I got screwed on QCOM yesterday. Even though they reported good earnings, I bought the shares, then it tanked.
Damn.
And then I sold it for a loss. And then in the morning, it jumped to 192. And I was so pissed. And right at open, I shorted it at 182. And it ran up $9. And then I covered it like 184, 185, taking a huge loss.
Ouch. Yeah, I see that. QCOM that had a very volatile morning. Like I'm looking at the chart right now from today, and it had like a nice pump and then just sold off, and then nice reversal, sold off. So are you looking to play Snap shares tomorrow?
Yeah, I was thinking to play that early pre-market.
You know, the thing is, like, if you're to enter it pre-market, I would advise you to exit it pre-market, just because pre-market's going to trade in its own world, and then market opens at 9:30 and it's a completely new world.
Yeah, so, lately I don't overnight nothing. I stay all cash.
Yeah, I mean, with Snap, like it really did hold price after hours very well, like even better than Google did on their earnings, if I'm not mistaken. Yeah, like I know Google continued all day long and after hours, but then as you can see, just like practically gave most of it back to the market. So with Snap, yeah, just follow the levels that I mentioned previously. So what you're going to look for is 34.76 as your support. And then you also just want to see, like, if it doesn't hold that support, it can bounce off the 33 range. And then your next resistance to look for is 41.04.
So I'll tell you a thing. I was with MTC about last year, like in September, October. I blew up one account completely down to the ground.
I
And
mean,
then
man,
I put
options.
money back in. Now I'm building it back up again.
This time around, we're going to do it correctly. We're going to do it with risk management. We're going to do it as we learn how to read charts, and we're going to have some damn fun doing it while we're at it, because this week, like, signals were just on point. I mean, there were so many, like, everyone that swung SPY calls and Amazon calls into tomorrow. Oh, they're chilling, man. Like, they're about to have a great morning. AMD 400% earning play, and then Jake signaled puts at open. I think that went for like 150%. So yeah, man, have fun with the signals and just keep asking questions about the charts, because I'm telling
Yeah, I
you.
just had one, what do you call, suggestion to say, not really a question. I've been part of different groups and I've seen like the way you guys alert, like the alerts are good, but they're like all over the place. Some are in that 5K to 100K challenge account, some are in a different account. Can all the option alerts be like in a single channel? That makes life a little easier.
Yeah, so the reason we don't have them in the signal channel is because each play is like designed for the channel that it's in. So like with the option signal channel specifically, like I can pull up Discord and just show you. So with this option signal channel, this is plays you can take on any portfolio as long as it fits your risk management. But then when you're trading like long-term plays, these are just like deep option swings. You know, the reason there haven't been any recently is just because of inconsistent market legs. Same thing with option spreads. These are all just like spread plays. Now with the 5K to 50K challenge, what we're simulating with this is that like we're basically holding your hand through the portfolio. Like we're telling you how many to buy, we're telling you when to sell, we're telling you when to trim, when to average down. So like with these, it's like you start at 5K with us, followed up. Same concept with 500 to 5K and 100 to 1K, you know? So that's the reason we have different channels. But shoot me a DM on Discord and we can talk about this more, because I definitely do want to make sure that like this is an easy way to like, I want this to be easy for everyone. So just shoot me a lesson or shoot me a DM on Discord and we can talk about that more.
Sure.
But in the meantime, are there any other charts? I'll take like one or two more just so we can sign off by like 8:45, 8:50. But I want to Facebook. Yeah, I got you. Oh man, Facebook. Poor God. Dang. Every time I look at this, it hits me again. Like I can't, like I can't do anything but laugh. Like this is intense. With Facebook, let's see what we can do here. Let's see what we can do here. So we'll definitely be able to find support off of this high. Honestly, like with Facebook, like we could see it fall to 222 or possibly recover at the, this is tricky. It possibly
it wasn't a trick question. Is it Yazan? How do you say your name?
Yeah, Yazan, how are you doing?
Yazan, I'm good. That's why I had you pick this one. Let me be transparent. I'm new at trading, started in March, but that's why I picked this one, because I like what you're teaching. But and looking at this one, I'm like, where do you even start?
Yeah, I mean, honestly, with Facebook, like using the data.
I know there's some stocks that just do their own thing. Like I understand that, there's always exceptions to the rules as far as days, stocks, all kinds of things that can happen. But I was just trying to figure out how to even start on this one.
Yeah, so with Facebook, like it really is tricky, because if we were to just like look at the chart from here, it's perfectly fine. Like this is a tradable chart. But then you see this gap down because of earnings. So Facebook reported like bad earnings specifically because like they're expected to lose billions from the Apple feature that basically doesn't send consumer data to like the company. So like, let's say you were to use like when you download a new app on your iPhone, it'll tell you like, hey, do you want to send data back to the company? Yes or no. Facebook makes a lot of money off of that data. They take that data and then they sell it to other people. And it's how it generates Facebook ads and Facebook Pixel and like all of their marketing. So as a result of that, they had shit earnings, and that's why like it fell so hard. I'd say with Facebook, like whenever, Facebook's a big company. I think with Facebook, like the best thing to do here would be to honestly scale into a small shares position. Like this could be a good level to buy shares, because at the end of the day, Facebook hasn't changed as a corporation. Facebook still has like a very positive outlook going forward. it's just a result of really bad earnings. So whenever I see something like this, like my first thought is just to let it sort itself out for a few days, because what we call this is a falling knife. You know, you don't want to catch a falling knife and get stabbed. So with Facebook, my best advice would be to avoid, but like for, you know, a $300, almost $400 stock to be trading at 235, 241, like it's definitely a good price to start opening like a share position if you don't have one already. But in terms of like how to analyze this, like I guess like the most you could use is like the 5-minute chart, really. Like use the pre-market level into tomorrow. Like I'm personally just like avoiding Facebook just for now, just to let it like figure itself out so we get a clear direction. Like, is it going to move higher? Is it going to move lower? Do you think the market overreacted with Facebook?
Yeah, no, thank you. I think that's good advice. And then this is not even a chart. This is just, I mean, you can put this in the Discord tomorrow, but just like the mixed opinion about Amazon and how like their earnings could be considered misleading, considering that most of the Q4 earnings were off of their acquisition of Rivian.
Yeah, so I haven't dug deep into the Amazon earnings. So I didn't even know that they got a lot of their profit from Rivian in the Q4 acquisition, but I do plan on reading into the Amazon earnings tonight.
I mean, just as a novice, it looks misleading. It doesn't look as great as everyone has made it to be in how they trade it off of the earnings, because they really did. They also did like Facebook. They missed. They up because they acquired Rivian.
Yeah, they also gave Amazon like a lower EPS expectation to account for that as well. Yep. The one thing I'm looking for specifically with Amazon earnings is to see how their web services performed. So like a lot of people think Amazon makes most of their money from selling goods, but a lot of the Amazon revenue is derived from like Amazon web services and like the servers they host. So that's definitely something I want to look into. I'll hold your thought on Amazon because I still need to sit down and look through like the SEC filing, because I haven't read into the earning report yet. I just saw like the aftermarket pump. So
just
I'll address that in the Discord like tomorrow, like what exactly we need to do with Amazon going forward. But yeah, that's very interesting. I definitely want to look into that Rivian thing because I just haven't read the earnings report yet.
So the reason it bounced was they're increasing the Prime membership fees, and that was like a positive sentiment looked at it by people, and it spiked right there.
Really? Okay. So I saw one analyst that said that they see that as like poor guidance going forward. Do you know which? I
agree.
Do you know which analyst reported the increase in Amazon fees or Amazon?
I saw that on Webull, so it popped up in the news feed on Webull.
Okay. Yeah, with Amazon, I just haven't had the time to look into it yet because like it came out a few hours ago, had a busy evening. So as soon as I get a chance to review the Amazon SEC report, we can definitely have like a nice conversation in Discord with that. But before we conclude Amazon, I do want to quickly answer Will's question about, do I think the market overreacted with Facebook? I think so the market is very, very forward-looking, like very forward-looking. I think what the market really did when they were like with this Facebook sell-off was that they're just like taking into account, like if privacy claims continue to increase, like it's going to force Facebook to take a big hit in their like Facebook ads. Like a lot of the money Facebook generates is simply because they offer Facebook ads, which you can view on Instagram, you can view on Facebook, on different platforms. So if we continue to see like more security clearances that are basically like, yeah, like companies can't sell data and whatnot, like it's going to hurt Facebook, because at the end of the day, like the money that they derive from selling data isn't money they should have to begin with, you know? So it's almost like the market's punishing them for something that they got away with, kind of, because like at the end of the day, you can't be selling people's data. Like it doesn't matter how much money it's going to make you. Like you can't tell companies like, hey, like this user is interested in pink iPhones and yellow Louis Vuittons, you know, like you just like it's unethical. It's like an unethical practice. So I think with Facebook, a lot of that came from the fact that like as Apple continues to beef up their security and beef up like user control over what data is being sent to companies, it has a negative outlook on how Facebook will perform in terms of their ad revenue to see in the future. Plus metaverse. Yeah, metaverse is an idea right now. I don't even know, like every 2 days I see a different article. Metaverse is going to be open by 2025. And then the next week it's 2028. And then the next week it's 2030. Sadly, like I'm not a fan of the metaverse. I don't like the idea of like a virtual world when you can just like live life in person. But at the end of the day, companies are going to be all over it, you know? So like, that's why I say like buying Facebook shares really isn't that bad of an idea, is because like Facebook, like the metaverse it's going to do well. whether we like it or we don't, like it's gonna be a thing. They have a lot of money behind it. They have a lot of powerful people behind it. And yeah, I see you sent me this earnings thing. I'm about to save this one so I can take a look at it. But
Yeah, going up $20 a month. I mean, year.
to 139. Damn, I still pay $4.99 a month. I have a student account for it. So like I only
So do I.
yeah, so like I don't even pay the full price. Wow, that's a lot. I mean, the thing is, like, Amazon takes 33% of what's it called, of all transactions. So like I don't even see why they want to raise the cost of Prime. So not really sure there whether we like it or not. I believe it's oh yeah, Steven, for sure, man. Like the metaverse is just like, sadly, like that's exactly where we're headed. There's just no stopping it. I mean, with Zoom, like the fact that I'm able to, right now we only have 15 people in here, but like last lesson we had like 60 people in here and we were just talking through our devices like that. Like remote work is the future because it's also cheaper for companies. You know, the metaverse allows companies to save money. If bankers don't have to come and work in the bank, these companies don't have to pay as much for buildings. They don't have to pay as much for water. They don't have to pay as much for electricity. They don't have to pay as much for energy. You know, when you have your employees working from home, you're saving a lot of money. And the metaverse sets it up to be exactly that people don't have to leave their homes and they still maintain the same like social need. So, man, we could talk about the metaverse all day long, like all day long. But yeah, for Amazon specifically, I'll take a look at it tonight and get a better insight of exactly what went on with that. And we'll definitely discuss it tomorrow in premium. Thank you everyone for joining. I hope you guys learned something today. I hope I was able to help you guys. For everyone that stayed this long, I really appreciate it. It's definitely nice. Keith, my man, I see you. You've been here for all the lessons. I really do appreciate that, man. And yeah, if anyone has any other questions, feel free to message me on Discord or shoot me a text if you have my phone number. And we'll go from there. Thank you, everyone. Have a good night.
Thanks.
You too, brother.
Good night, man.
I appreciate
Good night, y'all.
Take care, everyone.
Peace, peace.
Vish.
Hope everyone has a good night. Thanks for joining, guys.
Hell yeah.
Thanks a million. This was everything.
Oh, of course. Thank you for joining.